Welcome to QAV Australia, 6th of May, 2025, 1:42 in the PM. TK, big election. What did you think of the election result? Hold on, no, before we get to that, hold on, I've got a pre story I've got to do before we do that. I nearly forgot. This is a tragic story, actually, from QAV member Ben, who reached out to me during the week. And I just wanted to give Ben's story a bit of a plug here. He says, my 9-month-old son was diagnosed with an extremely rare genetic disorder about 5 months ago. Unfortunately, it is a really horrible disease that's progressive with no cure and ultimately will be fatal for him at a young age. I've put our website below if you'd like to read more about his condition. So, I had a bit, the website is QAS1, CUREASONE.org.New Zealand. They're trying to raise funds to look into research for this condition. It's called the ECH1 deficiency. It's a very rare disease. I think there's about 100 people a year that get diagnosed with it. And 10 of those are in this one town in New Zealand where Ben and his family live. So it's really quite tragic and bizarre. It says on the website, this condition is caused by mutations in the ECHS1 gene, which leads to problems in energy production within cells, particularly in the mitochondria. People with ECHS1 deficiency often experience severe neurological issues, developmental delays, and muscle problems when they are babies. That could be seizures, dystonia, which are painful muscle contractions, severe developmental delay, hearing loss, damage to the optic nerve in the eyes, and failure to thrive because their bodies starve themselves. Ben didn't ask me to promote it. He just asked me to pause his account while they go and deal with this. And I said, hey, would you like me to give it a plug on the show? He said, that'd be lovely. So we've got a number of well-heeled people who might like to contribute and help out. So I just thought I'd throw that out there. It's, you hear stories like this and always makes me doubly grateful that all of my children are healthy. Okay, so they're TikTokers, but outside of that, relatively healthy.
Relatively healthy.
No, in all seriousness, like it's gutting to hear these stories of people with babies with these sorts of things. So if you can help out, cureas1.org.nz.
Yeah, thanks, Ben. Well, thanks for sharing your story. I echo Cam's sentiments. I don't know how many times I've gone to bed grateful for the fact that Alex is healthy, even, as a young adult. Your thoughts still go to what could happen, which is never pleasant. So, yeah, really sorry to hear that, Ben, and all the best, mate. Good luck.
Well, somebody who isn't going to get a cure is Peter Dutton. Peter Dutton is I don't know. I haven't seen him around. His billboards are still up all over my neighborhood, but I think we've seen the last of him. So what did you think of the election result, Tony?
Oh, I was happy to cash in on my bet, Cam, at 7-1 that Labor would form a majority government. So, which was no indication of how I thought about the policy. I just thought that the odds were wrong in that market. I think I think Ruddy said it best. He said it was heartwarming, regardless of who you support in politics. The fact that Australians en masse has rejected Sky News and the Murdoch Press, the Herald Sun, the Sydney Telegraph, the Courier Mail, the Stoke Press in WA, I think is heartening. It's a victory for common sense, in my opinion. And
surprising to me, after the no vote.
Yes.
On the voice thing. And, we seem to be moving further to the right. And, I've been saying for decades, I don't want us to end up like the United States. And we seem to be sliding that way. It was really heartening to see Australians go, maybe not.
Yeah,
Maybe that's not where we want to be.
Jenny and I went to an election dinner on Wednesday night as a guest of Alex Hay, our stockbroker. He does it every federal election, and it's a great time to catch up with people in the funds management industry in Melbourne. And Alex has some friends who are pollsters and someone who operates a betting agency. He's a CEO of a betting agency, so they all get up and take you through the polls and what's going to happen and their predictions and all the rest. And it was really clear from sort of one particular slide that stood out from the pollsters that when prior to the voice referendum, Peter Dutton had a lead over Albanese. After the voice referendum went down, that lead just split. It was greatly exaggerated in favour of Dutton. After the election of Trump, it started to narrow. After Liberation Day, it crossed. And with a week to go on the polls, it was going straight up one way and straight down the other way. So it's, I think not only, did those sort of three key things happen during the election campaign, but also I think it's been my sort of perception that Australians can sniff a trend. And in the last week of an election campaign, if you were wavering on where to vote, you're probably going to vote with the person you think will win, just to be part of the celebration, I guess, or to be on the winning side or whatever. I'm not sure what the psychology is, but I've seen it happen before. But it really happened in a big way in this election. And to look at the betting odds, they went to something like, at the start of the campaign, Labor forming majority government was, $7, to the Liberals winning $9 as of last Wednesday night at this election dinner, and Labor winning like $1.05 or something. So it was a real clear switch around after Liberation Day.
Yeah. I read in the Fin just this morning, the Liberals lost the female vote across all age groups in 2022, 18 to 34s, 35 to 54s and over 55s, including against female candidates and well-heeled electorates. They also lost people aged under 55, metropolitan residents and the professional class, and they were saying that it didn't improve this time. They didn't make any of, they had like a what do you call it? Analysis. Yeah, post-mortem. Yeah. Thank you. On it last time, they had a whole bunch of recommendations of what they needed to do to fix it, and according to this article in the Fin, all the strategists saying they didn't do any of it. So correct. It's probably going to look the same when the dust settles on this one. It says the party's supporter base is now dominated by men aged over 55, and as I don't turn 55 until October, I've got a few months left where I don't have to vote Liberal, so I'm happy about that.
Well, you might only have a few years left where you can vote Liberal. I mean, that's the interesting thing. When does the strategy of going to the right and targeting the edge of our cities and the sort of people who live there has only got a certain shelf life before it bumps up against the National Party, who held all their seats in the rural areas. So, as part of the 2022 analysis and as part of this analysis, the answer's got to be get more women in Parliament, get more women standing for Parliament, and start to address issues like climate change and other issues that are important to educated females, and take on the Teals. Now, I know they'll say they did that in a couple of cases, but you've got to have policies to back that up. The whole flip on, we're going to force people back to work, and then, oh no, we're not, when we find out that women like it, just was a bullet in the foot, and just showed what you were saying, that the election strategy was really the election strategy for Dixon writ large. Didn't work in Dixon. Peter Dutton lost his seat, and it didn't work for Australia. And it was actually a really generous concession speech by Peter Dutton. And it was telling in that he got up and said he's honoured to be party leader, etc., and to run for prime minister. But the highlight of his career was being a defence minister. And I thought, yep, that's exactly where your mind is at. It's immigration, it's borders, it's policing. And they're important issues. But as the pollsters said on Wednesday night, the top 5 issues in this election were all cost of living. interest rates, costs of energy, cost of electricity, et cetera, fuel prices, whatever. So, to not have policies to directly address that and keep hammering it was a misstep, a fatal misstep.
Yeah, the top policy for me was, what are we going to do about AI in the next 5 to 10 years when it gobbles everything up? And no one was talking about that. No one. Not the Greens, not an independent.
You talk enough about it.
Maybe I should run.
Maybe you should. Although you're a 55-year-old white male, so
yeah, I'm done.
You have to run for the Liberals. Yeah, you have to move out to the country. But I don't want to let the Labor Party off the hook here. They may have a majority in the Senate. They certainly have an overwhelming majority in Parliament, which probably gives them 2 terms, not just one. That remains to be seen. But I really hope this is security in the electoral process for them, to give them the spine to be able to really go after tax reform properly and productivity reform properly. There are areas which are always going to hurt one constituency in the electorate, but if you've got a fat margin, this is the only time you can do it. So I hope they tackle those 2 issues. And I also, the one issue that's on the books, which I hope they change, is to tax unrealised gains in superannuation funds. That's a mistake. I'm hoping that they'll go ahead with the extra tax on large super funds. I'm not hoping they do that. I hope they do that and that only, and that they drop the part which says that you have to pay tax on unrealised gains, because nowhere else in the tax system, nowhere else in the world that I can think of does that. And it's a mistake. It's a mistake for someone who has illiquid assets in the super fund, like they've grown a business, their own business in the fund, or their farm, or they put some property in there. Having to deal with a tax bill and not have dividends to pay for it, or interest income to pay for it, or any other sort of income to pay for it, is a mistake. So hopefully they'll see the sense on that one too.
But they need the revenue now, not when they sell the asset. The government needs the revenue now to pay for stuff.
Yeah, but you only we'll talk shares. In the share market, you only pay capital gains tax when you sell the shares.
Mm-hmm.
So that's the same as it currently works in superannuation. What the ALP is proposed to do for superannuation is, if you're over a certain balance, and I think that may have moved a bit. It was 3 million. Some people are talking about 2 million. You have to pay extra tax. But if even if you hold shares and you haven't traded in 12 months, if those shares are now worth more this year than last year, you're taxed on the unrealised gain. So you'll have to sell something to pay the tax. So it's just, it's not a workable scenario. It'll just end up in people owing the tax office large amounts of money. And if the tax office decides to go after them, it'll bankrupt people. They'll have to sell something they didn't want to sell, which could be a fire sale.
Well, okay, but that's not bankrupting people. You just sell the shares and pay the tax.
No, it may not bankrupt people, but some people it will. They may have to sell. It may have gone up this year, but it may still be a negative holding for them, for example. Our shares can go backwards, be underwater, and in the last 12 months have turned up and be an unrealised gain. Actually,
but the gain
the cost basis. No, it can't be an unrealised gain. Yeah, no, true.
Look, I'm no expert on it. I did know you were going to talk about it, though. I had it in my notes. I knew you were going to arc up against about that because you did last time. But anyway, I remember when Obama won in the US, and everyone was talking about how the demographics in the US had changed forever. Black and Latino voters, young people voters, the GOP was done for. It was going to have to completely reinvent itself, et cetera, et cetera. It was never going to win another election. And I guess it did reinvent itself, first through the Tea Party, funded by the Koch brothers, which then merged into Trump's MAGA movement. So parties can come back from this kind of a defeat.
Absolutely.
All the analysis in the last couple of days has been saying, that I've seen, says all the demographics have changed, Liberals are done, the coalition is done, And I'm like, yeah, well, we'll see what happens. And yeah, the
No,
GOP
I
just
agree.
went further and further to the crazy right, but somehow managed to build a broad enough church around the crazies that they dominated. So we'll see.
And there's certainly people out there saying that's the solution, is to go further to the right and take votes off One Nation and Trumpet of Patriots and all those kinds of people.
Trumpet of Patriots didn't get any votes, but yeah, One Nation got a few.
Well, would they get 3%? One Nation got 11, I think. So there's 14%.
Yeah. Yeah.
Which
That's
may be
true.
enough to get them back into a race again. So I hope they don't do that for the reasons that we've seen in the US. I don't think that's the solution. Gina Reinhardt was quoted in the paper today saying that the reason why the Liberals lost is they didn't adopt Donald Trump's policies, and because they were scared of the left media.
Yeah,
and
the left
that's
media.
her point of view. And, some of her points are quite valid about government, red tape and intrusion and low productivity. But I don't think adopting Trump's policies is a solution to that. Again, you can tackle problems while still having a level head without turning it into the culture wars. And I think that's what Australians have said to government. We don't want culture wars anymore. We want common sense and we want level-headedness, whichever side of politics you're in. And the other thing that too I think happened in this election was the Liberal leadership often resorts back to past victories as a roadmap. And of course, the big one was John Howard, and I think he's served more terms than anyone since Menzies, at least on the Liberal side. And so they use that as a roadmap. And his roadmap was to go to the outer suburbs and to go after the battler vote. That's all fine. But the fact is that people like Alex, who've now turned 26, your boys, they don't know who John Howard is. They weren't here when John Howard was winning elections. So if you're going to try and revamp an old election strategy, at least modernize it for people who haven't seen it before, because it didn't work for them this time. They weren't relevant to a whole new demographic of young voters coming in. Probably a lot of them may have, I haven't seen the breakdowns. I guess a lot of them may have voted independent or voted Heal or whatever, because both parties have a slide in primary votes, which is it's got to be an issue for the ALP, which they should be addressing in their postmortems as well.
Well, enough about that. The big news that you want to talk about, don't worry about the Australian election. The one thing taking up your brain space this week. Jesus.
The horse sales
is
on
retiring. Value investing Jesus is
the old white guy.
Warren Buffett in
big news.
Berkshire Hathaway, the 60th annual meeting of Berkshire Hathaway, he announced that he is retiring this year. His 60th and final performance. And to be honest, I mean, I watched most of his bit. Without Charlie, it's not it's not the same without Charlie, right? It's just I keep waiting for Warren to do his bit and they go, "What do you think, Charlie?" And Charlie having some bon mot at the end of it, some punchline. There's no Charlie punchline.
No Charlie. No.
Is this the second year without Charlie or the first? I think it's the second, right?
It's
second annual meeting.
Second, yeah, second.
Yeah,
and he wasn't there during COVID because he had to lock down.
That's right.
Yeah.
Look, it's and Warren's sounding his age too, like 94. He sounded pretty croaky. He's walking with a cane, but I watched, I don't know, maybe 2 hours of his thing. Like, still incredibly entertaining, articulate.
Oh yeah,
just terrific. Telling stories about how a Berkshire Hathaway lab invented the rear vision mirror for a racing car. They used to have two guys in a racing car, one to look behind them and their guy was sick and couldn't make it, so they invented the rear vision mirrors. He's like, so if you're wondering what Berkshire Hathaway companies are doing, just inventing things like rear vision mirrors for cars and stuff like that. There's some subsidiary
Well,
of a subsidiary of a subsidiary that was involved in it, but yeah.
my favourite anecdote, I've only listened to the first half of it, and it's available on both podcast and YouTube if anyone wants to do yourself a favour and sit down to 4.5 hours of it. But my favourite anecdote was when they were talking about the cash pile that Warren had built up, and someone asked him from the audience whether there weren't enough fat pitches to swing at. And he said, well, yeah, it's a bit like life. A 10-year-old's going to have a lower chance of dying tomorrow than a 94-year-old. So you don't always get the same odds every time the market, wherever you are in the market cycle. And he said, as to longevity, I also point out that females live longer than males. So I tried to convince Charlie to have a sex change.
It's a great line. It was a great line, yeah. Some kid got up and asked him, said that he'd always advocated moving slowly, and were there times when moving quickly had benefited them? Have you heard that one?
Yeah, but go ahead. Tell it. It's great.
Well, no, he just says, there have been times when they moved quickly, and he talked about one guy. I think it was the same guy that sold him the company that ended up building the rear vision mirror, but he found a guy that his business partner had died, and this guy didn't want to do business with the guy's widow, so ended up calling Warren and saying, hey, you want to buy my company? And they moved quickly and did a deal, like in 10 minutes with a handshake. But he said, basically they move slowly to build up the cash, so when they need to move quickly, they can. That's basically, it's not like you always move slowly. You move slowly until you see the reason to move quickly, and then you move quickly. But it was like a 20-minute answer to the question, but it was a long, meandering, anecdote-filled answer. But it was great, and I'm going to miss that.
Oh, yeah. Yeah.
He is the end of an era for many reasons, but one of them is just that country bumpkin, down home, soft, just gentle, nice man of integrity, old school, who does business with his head held high and, treats people with respect, expects to be treated with respect. He said something about you have to be willing to hang up within 10 seconds, but also like close a deal within 10 seconds as well. He was talking about how most of the people he just says no to very quickly. But then there are times when he says yes quickly.
He's spoken about before, where he says, I asked 5 questions, and if they can answer those, it's a deal.
Right.
So, I mean, he won't divulge what the 5 questions are. People have tried to work them out, but he has five questions, and which is amazing. And he acted very quickly during the GFC to bail out some of the American banks and to be the lender of last resort, and to do 2 very favourable deals for Berkshire Hathaway to recapitalise some of the banks at tremendous interest rates back to Berkshire, and convertible note deals. So, yep, he's smart.
And Greg had a good follow-up to that too, where he said you don't underestimate the amount of work that's happening behind the scenes when we're moving slowly, so we can move quickly when the right deal comes. They said there's can't remember the number, but there's a handful of businesses that they understand really well, and they're ready to move on really quickly when the right price, right opportunity comes across their table. So they've done their due diligence.
Yeah, sounds like a buy list, doesn't it?
Yeah, they have a buy list. Yeah, exactly. They're just waiting for the price to be ready, and waiting for times to be tough enough that people come to them. But as always, people asked him about, they asked about AI. I think it was Ajit. They asked about AI. Warren said he would take one Ajit over 100 AIs any day or something like that. But
for the next
Ajit
10
also
years,
said AI is going to have a huge impact on the Geico business, the insurance business. But they also talked about the prospects of the US, a lot of doom and gloom, obviously, about the US markets and the future of the US. And Warren, as always, was very sort of optimistic about the future of the US, but then also did disclose that they've bought a lot of foreign currencies. So I don't think he's as optimistic about the future of the US dollar. But yeah.
Well, he made a couple of comments, and he tries not to be too political, but you know,
Yes.
he said it doesn't end well if one country beats their chest and says, hey, look at us, we're really good, and the rest of you can go away. He said that, you know, world trade helps all countries, which I think is I think is true. Someone in writing about, I don't know if it was Warren, but he does like to say never bet against the US, and he pointed out at some stage that the stock market in the US has risen from $66 to $11,497. This is a few years ago, I guess, despite 2 world wars, a depression, and a dozen recessions, all shocks and flu epidemics. So, you know, he's always pointed out the long-term game of backing the US and the fact that it's probably still going to be around for a while. So I thought that.
Yeah, but
even though he's investing heavily in Japan and overseas for sure.
It's cherry picking the era, though. I mean, he's talking about the success of the US during the century when the US was basically the unipower of the world. I mean, there was no other competing forces in that 100-year period. From World War One, mostly after World War Two, the US didn't have any competition economically or militarily, really. It had a very empty runway. And it's not that case. It's not the case anymore. It's not going to be the case for the rest of this century.
We'll see. It's they've certainly done well so far the first 25 years of this century. Stock market's up dramatically, and they're facing competition. But yeah, maybe it'll be tougher. I mean, I think they did face competition in the first bit of the US in the 20th century, the end of the British Empire, and some parts of Europe anyway. So yeah, they had a lot of tailwinds for sure. All I'm doing is commenting on what Buffett's saying. They may have difficulty going forward. They may have had headwinds last century. They still have headwinds. I think they'll do okay.
Well, we'll see. Let me move on. Do you want to talk about Warren more? Do you have more Warren comments?
I do. I've got some quotes.
Okay.
Yeah, so let me just go. Yeah, so just on that, one of his quotes from the annual meeting was that he accepts that the American process has not always been pretty and is infested with scoundrels and promoters. So I think that's to your, comments as well about US exceptionalism. But despite all that, he still says don't bet against America. There was a talk about the investment with Apple and Bank of America. So the quote is, Berkshire has been selling down its enormous stake in Apple and Bank of America as the proceeds have accumulated into an enormous pile of cash, 536 billion Australian dollars. The initial investment was one of the greatest trades of all time as the firm, which is Berkshire Hathaway, accumulated 900 million shares in the iPhone maker. Buffett quipped that Apple chief executive Tim Cook made more money for Berkshire Hathaway than he ever did. The investment grew from about 35 billion to 173 billion US in about 6 years. However, last year Berkshire began selling and reduced its Apple stake by 2/3. There was some speculation at the time that the sales were part of a succession plan, given that Buffett's 94 years old. Buffett did indeed confirm that he was stepping down, but he said he had no intention of making Abel, who apparently didn't know about the succession plan prior to the announcement in advance, look good by handing him a wad of cash.
Yeah.
The big liquidation of Apple stock proved justified as trade wars and supply chain concerns have since sent the stock down as much as 20%. So I think he said something like, when someone asked him about the pile of cash, was it set up to make Greg look good? He said, no, I want to look good. Article today quoting some of the Australian fund managers on Warren Buffett. And I should say, in addition to the comments I'm about to read out, if you are listening to this and you haven't read the collective shareholder letters of Berkshire Hathaway, and you haven't read either The Making of an American Capitalist or The Snowball, just drop what you're doing and go and buy both of those and read them, because they are the best course you'll do in investing. Full stop.
Yeah.
So John Abernethy, which is he's the chairman of Climb Investment Management, and I declare I'm a director of CIW now, and have been a long time fan of John. But he said Warren Buffett has an overwhelming supply of common sense that gives him the capacity to invest both logically and methodically. Of course, common sense does not mean that he always gets things right, but it does allow him to make consistently good decisions and to quickly identify and rectify wrong ones. Both of these attributes make him a great investor and, importantly, from a human perspective, a great mentor to the investment world through his published thoughts and letters. Andrew Mitchell from Ophir Asset Management said, one of my favourite Warren aphorisms is, I don't look to jump over 7-foot bars, I look around for 1-foot bars that I can step over. Whenever a day like Liberation Day tariffs come along, I remind myself of Buffett's never wavering view of America and capitalism and the positive sum game that investing is. That was a quote about the Dow going from 66 to 11,000. Chris Prunty of QVG Capital says, I was 17 when I bought the Warren Buffett Way at Denix and Tuggeranong, Canberra. I read it immediately and thought this is what I want to do. That was my first real introduction to the world of stock picking. What I've learnt from him the most is rationality and discipline. Even when answering financial questions, he's deeply analytical, always going back to the numbers. It's incredibly difficult to maintain outsized returns when managing vast sums of money, yet no one handles more than Warren Buffett in terms of money, and still he's continued to generate credible, sustainable returns. That combination of scale and success is almost unmatched. Finally, his willingness to teach and share what he's learnt is another remarkable quality. He's been generous with his insights, helping others understand the principles behind his success. And lastly, Jeff Wilson from Wilson Asset Management. He says, Charlie and Warren's influence wasn't just about stock picking, it was about instilling common sense and sound principles for both investing and life in general. Buffett and Munger made complex financial concepts accessible and practical, teaching not only about investing, but also about the skills and mindsets needed for success. They shared life lessons and transcended the world of finance. Their ability to communicate the benefits of long-term investing, discipline, patience, and rational decision-making has left an indelible mark. For decades, they showed us what it takes to succeed in investing, how to think independently, and how to make decisions based on thoughtful analysis rather than emotion. So I echo all of those sentiments, and if I ran the school system in Australia, I'd make the life and times of Warren and Charlie part of the curriculum for all people going through grade 12 before they enter the workforce.
Roger Lowenstein, who wrote Buffett, The Making of an American Capitalist, wrote an article in the New York Times today, the likes of Warren Buffett we will never see again. And I just wanted to read a couple of paragraphs from that. He says, Berkshire stock on that day in May that Warren took over the company, is 1963, closed at $18 a share. When he delivered the news of his retirement, it was above $809,000, almost 45,000 times as high. Over the same span, the Dow Jones Industrial Average is up just under 45 times. How much did you sell your Berkshire shares for, Tony?
No, don't keep reminding me.
Wasn't that
a lot
big
less than what they are now. I think it was, going from memory, it was in the 300s from memory, thousands.
Yeah, that was years ago. I did it. So that's only...
It was. And yeah, I did it because I actually was concerned what happens to Berkshire Hathaway when Warren and Charlie go. And it'll be interesting.
The share price is down.
Is it? Okay, I haven't checked.
Yeah. Yeah, I heard it was down like 6% or something after he delivered the news. Anyway, Lowenstein goes on, Mr. Buffett has long stood out on Wall Street because he eschewed its frequent chicanery, self-dealing and greed, and the double talk that went with it. He revered the institutions of capitalism. Most especially, he treated the executive's duty to shareholders as a sacred trust. Lest he be accused of violating that trust, he capped his annual salary at $100,000. He never took a stock option, the unholy tool by which chief executives expropriate a piece of the business from the shareholders for whom they are fiduciaries. In corporate America, that made him all but unique.
Correct. 100%. And largely didn't sell shares along the way. He's been giving them to charity. He's part of the wealth pack, the giving back pack. Yeah.
Yeah, and lived relatively simply, right? Same house,
Mhm.
same car, more or less. He had a few divorces along the way and moved stuff
We have
around,
one.
but
Yeah.
right.
And he
Lived
you know
simply.
he lived simply. I think that may have changed over the years. I think he was a good marketer when it came to that story.
Right.
I've been to his house in Omaha. It's certainly, a classic middle class suburban house in America.
Mm.
But I think he probably has lived out of hotels for a long time.
Right.
And at one stage, there was a corporate aircraft for Berkshire Hathaway execs to fly around in. So, yeah, he's done okay on the lifestyle front. I'm not going to begrudge him that.
But he didn't live some sort of exorbitant,
No.
gaudy sort of lifestyle. Like, he kept it relatively simple.
Correct. And, I turned on the TV again this morning and there was some clip for some dude from the US, sitting in a Maserati or driving a Ferrari, singing his song and sitting on a yacht and, drinking champagne. And I'm just thinking that's not a good image in my opinion. Warren's image is much better.
Mm. All right. Anything more you want to say about Warren before we move on?
No, and we're kind of sounding like he's passed on. He hasn't. He's probably still going to exert an influence on Berkshire Hathaway. But yeah, next year's AGM will be interesting. Warren leaves, I think, in December. So it'll be 6 months under Greg and Ajit and Todd and Ted and everybody else. I suspect, Warren's thought long and hard about succession and how to structure Berkshire. So it's hard to take over and break up and to give Greg the right kind of training to trust Ajit and to trust the investment team, etc. So, it'll be interesting to see what happens.
You think 30,000 people will turn up to the annual meeting once Warren's not there?
I have thought about this. It's more than 30. When I was there, it's like there's they use one of the arenas which holds 40,000 people. But if you don't camp out at early in the early hours of the morning, I think I got there about 4 a.m. You don't get a seat. You're forced to cross the road into one of the hotel ballrooms to see it live on TV. So it's more like probably double that turn up to Omaha to go to the AGM. But anyway, I think if Warren turns up as a shareholder, I think yes. I'd be surprised if I was Greg Abel. I'd be inviting him up on stage to take some questions. I don't know if Warren will do that, but if the sort of people think he will, they'll turn up. I think some people will turn up just to see how Greg performs and what's happened with Berkshire Hathaway, to get some kind of comfort that there's essentially no change in the strategy. But it'll be interesting to see.
All right, let's move on. I'm going to skip the OPEC story because we don't have time. I'll run through a couple of these things quickly because I do want to get your feedback on this. NRW Holdings. I was looking at they're on the buy list this week. I was looking at buying them for light portfolio yesterday and started to try and figure out whether or not they should be linked to some sort of underlying commodity. So for people who aren't familiar with or don't remember NWH, I'll just read sort of the basic business overview of them from Stockopedia. NRW Holdings Limited is a provider of contract services to the resources and infrastructure sectors in Australia, with operations in all Australian states except Tasmania and offices in Canada and the United States. Its geographical diversification is complemented by its ability to deliver a range of services. These encompass civil construction, including bulk earthworks, road and rail construction, and concrete installation, together with contract mining and drill and blast services, and they're involved in civil engineering, mining, minerals, energy and technologies, etc., etc. So going back to our conversation last week around biz alloy and the steel and that kind of stuff, I've sort of been a little bit more cautious about tying these businesses to commodity cycles. But after talking to ChatGPT and reading their the latest annual report and trying to work it out, they seem to be fairly diversified across different mining sectors. And I decided that they probably didn't need to be tied to any particular commodity, even though mining in general is sort of down on our commodity charts. These guys seem to be able to move around a bit and keep the business humming along. So have you looked at them much in the past? I know we've talked about them in the past. I wasn't sure how familiar you were, though.
Look, I'm not that familiar with them. I recall doing a pulled pork years ago on them. But from memory, they've recognised the commodity problem and they've diversified into the construction sector as well. So they do civil engineering, construction work and maintenance work too, and trying to get diversified away from the mining sector. But to your point, I mean, my classic test for whether they're linked to one commodity cycle is to open up Stock Doctor and overlay the commodity graph onto their share graph. And the only one I could see some kind of correlation for was iron ore. So I'm not sure if they have a large iron ore segment in their business. But that would be the only argument I could see for linking them to a commodity is to find their largest segment and link it to that. But like you, I think if it's diverse, if it's across other sectors outside of the mining sector, I don't know if you can do a commodity chart for them. And that's okay. I mean, we've still got the 3-point trend line on the business itself to rely on. We're just not going to get a heads up if the commodities cycle changes that might not have flowed through to their share price. But we, like any other industrial share price, we can still use the company's 3-point trend line to give us buy and sell prices.
Yeah. Well, the other one I wanted to ask you about was QPM. It used to be Queensland something minerals. Now it's just QPM Energy. They've sort of pivoted recently. Again, they're on the buy list, and I was looking at buying them yesterday. I think I did buy both of these in the end. They've sort of pivoted. They used to be precious minerals, I think, but they've pivoted now to coal mine waste gas. I think they bought a company actually that did this. So they have figured out a way to extract waste gas from the coal mining process, and then they refine it and sell it. And that got me wondering if there's a commodity for coal mine waste gas. I don't think there is a commodity chart. But then I was talking to GPT about whether or not that is linked to LNG commodity pricing. And it said, yeah, kind of loosely, because they're both marketing to the same customers at the end of the day, people who buy gas. It's just a different supply line, I guess. And I was trying to figure out whether or not I needed to use the LNG commodity price to determine whether or not, which is a sell at the moment, I think, whether or not that should impact QPM. In the end, I decided not to, but I wanted to touch base with you and see how you would assess somebody like QPM.
I'm not familiar with QPM, Cam. It hasn't come across my radar before. We can do a pulled pork on it if you like in the future, but a couple of things that, questions I guess I have to research. One is when you're talking about coal gas, is this coal seam gas, which was a thing in Queensland decades ago? We're going to extract it and sell it as a gas alternative? Or is
this is what
are they taking, is it carbon capture and storage, I guess is my other question.
I think it's the latter, but I'm not that sure. The website says QPM Energy focuses on the strategic capture and beneficial use of waste coal mine gas. This results in significant carbon abatement whilst providing Queensland with a reliable 24/7 source of energy.
Oh, it sounds like coal seam gas. Yeah, there were companies around doing that for quite a while. And, going back a long time, it was a big thing. The Queensland government was trumpeting that it was going to solve our energy crisis, and it became a niche business. It didn't get as large as people thought. But yeah, I think it is a gas substitute.
Yeah, later down further in their website, they talk about how they bought the Moranbah gas project in
Right.
2023, which is extracting gas from coal seams. It's been in production since 2006. So I think you're right.
Mm.
So
it could be. The next question is, when did they pivot to that? And,
yeah, that's the problem.
and
It's
then-
only been in the last year or so.
Right.
So it's
So you can't
really
overlay the
hard.
commodity. Yeah.
Couldn't overlay it. Yeah, I thought about that and couldn't do it. Yeah.
Yeah. Yeah. So I don't know, ask ChatGPT how traditionally has coal seam gas, what's the pricing for coal seam gas? Is it benchmarked to LNG? Is it linked somehow?
This is what GPT said. QPM Energy is influenced more by Australian domestic energy markets than global LNG trends. LNG prices may
Right.
provide a loose floor or ceiling, but the relationship is second order at best. While QPM Energy does not directly engage in LNG exports, the broader LNG market can indirectly impact domestic gas dynamics.
I need a domestic gas price graph. I don't know. There'd be one around. I don't know if we use one currently, though. Pretty sure we don't.
Sure, one of our QAV Club members probably knows way more about the gas market than
Yeah.
I do. So if you're out there listening, shoot me an email and educate me. Some quick news items. Healius Resources came out with their Q3 FY25 presentation. Record cash flow and upgraded guidance. Ooh, guidance from Healius Resources. Didn't we ping them recently for
We
bad
did.
guidance?
Yes.
Governance
nutshell.
red flag. Does that
Yes.
mean we take that off? No, we said new management.
No.
I think we said.
New management, or at least one results, but I think new management. Yeah.
MAH McMahon secures 172 million underground contract awards. If you're a McMahon holder, could significantly increase their financial position, according to an article that I read in Hot Copper. Woodside is proceeding with Louisiana LNG, but it won't come cheap with a US $11.8 billion price tag. Woodside Energy has confirmed that the Louisiana LNG project is moving forward with an investment of 11.1 US billion, targeting a supply of 16.5 MT megatonnage of LNG annually by 2030. So that might impact Woodside. And lastly, OML, Media, has announced leadership change as CEO Cathy O'Connor plans departure. Not a sudden red flag departure. Nice transition from Cathy
so.
O'Connor. She's going to step down in the second half of CY25 after more than 4 years leading the company.
Yeah, and we have a request, I think, in our questions section to do a pulled pork on them, so I'll do that in the coming weeks.
Good stuff. Well, speaking of which, seeing as we're on limited time today, do you want to jump into your pulled pork?
Yeah, sure. So my pulled pork is on Motorcycle Holdings. And the reason why I'm doing that, I've avoided doing MTO in the past because it has a small ADT. It's not a big company. But there was an article in the Fin Review on the weekend which piqued my interest about Hamish Douglas, that people will remember from the Magellan Fund, has bought a stake in the company. And I'll just read some extracts from that article. High-profile stock picker Hamish Douglas, who co-founded and ran Magellan Financial until 3 years ago, has taken a substantial stake in the country's largest wholesaler and retailer of motorcycles. Douglas, through his private companies, has bought 10.45% of Motorcycle Holdings, which carries brands such as Honda, Harley-Davidson, and Ducati. He says, I bought it when I thought it was fundamentally cheap. They've got a very interesting position as the clear number one player in an industry that's consolidating. The article goes on to quote from a paper produced by Ibis World on Australia's motorcycle sector, and they noted that it was highly fragmented, with many small text says small core mum and dad operators. I guess that means small-ish, small cap mum and dad operators servicing very localized customers. There are estimated to be 700 dealerships in Australia. Motorcycle Holdings has exploited the fragmented nature of the industry, using its scale and scope to entrench competitive advantages against smaller dealers and engage in aggressive acquisition activity. The report said that off-road motorcycles remain the industry's largest selling segment in Australia, with 44% of the market compared with on-road bikes at 35%. In the 6 months to December 31, Motorcycle Holdings reported a 20% rise in underlying earnings before interest, tax and depreciation of $26.2 million. In that first half, it also reduced its net debt by 1/3 to $24.2 million, while declaring an 8-cent fully franked dividend compared to the 3-cent dividend in the corresponding period. So a lot of good news in that if you're an MTO shareholder. But I decided to do a pulled pork. Oh, good. Well,
QAV Light is, sorry, we bought it back in December and it's up 29% since then. Bought it at $1.88. Wow. It's now $2.42. It's done very well.
Yeah. And its sentiment, it certainly crossed its sentiment line after its last results. Okay, so it is a small ADT stock, $71,000 traded per day on average. So it's not going to suit everyone listening, but it's still worth talking about given its good performance. They say pretty much the same thing that IBIS said about them. They are a leading motorcycle dealership and accessories group in Australia. They also engage in the sale of new motorcycles and used motorcycles, accessories and parts, finance, insurance, and mechanical protection plans, as well as servicing. Motorcycle Holdings import and distribute a range of motorcycles, off-road vehicles, parts and accessories throughout Australia and their own dealer network. Since 1989, Motorcycle Holdings has grown its dealership network both organically and by acquisitions, and by being granted additional franchises in existing dealerships, and now operates from the largest number of locations in Australia. Their story, founded by David Arnett, they have successfully expanded over many years. So David joined Maruka Yamaha in 1988. Have you been past Maruka Yamaha? Can. Probably on
Where's
the
Maruka?
Magic Mile of Motors. Maruka, South Brisbane. The Maruka Magic Mile of Motors used to be TV ads in Brisbane when I was growing up.
I'm not allowed to go south of the river, Tony. They got my poster up everywhere.
Peter Dutton won't let you.
Yeah. Well, he's next door. No, it's yeah.
The ad used to say Maruka Magic Mile of Motors. Anyway, that's a blast from the past. So he started off in Maruka Yamaha in 1988 and took a part ownership in 1989 with a chap by the name of John Oliver. Different John Oliver to the one on TV in the US. Since 1989, we have grown the dealership network both organically by acquisitions and being granted additional franchisees, as I said, and now operate from the largest number of locations in Australia. In 2011, the Archer Growth Fund became Motorcycle Holdings' largest shareholder, following the purchase of the Oliver family shareholding. So John Oliver exits the business in 2011. The company listed on the ASX in 2016. And they toot their own horn there, saying they became one of the most successful IPOs of that year. Since 2016, probably the next biggest milestone was the acquisition of a company called Mojo. The acquisition of the Mojo Group, one of Australia's largest importers and wholesalers of motorcycles, genuine spare parts and accessories, was completed in October 2022. The other thing about Mojo Group is that it also imports and sells scooters and ATVs, electric motorcycles, and the spare parts and accessories that go with that. And they have a 150-strong dealer network. Mojo Group is headquartered in Altona in Melbourne and has a 5,000 square metre distribution centre, backed up by a 2,000 square metre facility in Yatala, Queensland. The acquisition provided significant growth by introducing the importation and distribution of those scooters I talked about, Yeah, so that was NTO. That the principles of companies they've acquired over time have often become board members, and I'll talk about that in a minute. Well, I can talk about it now. So David, this company has an owner-founder, David Armet. Since 2011, he's been on the board, which is kind of strange. Stock Doctor says since 2011, but he's the founder and goes way back to the start of the company. So I think he's probably been on the board for longer. Anyway, he owns 15.4% of the company. Robert Casson, who has 35 years of experience in the motorcycle and bicycle industry, joined in 2017 as part of the acquisition of Casson's Group, a motorcycle and bicycle clothing and accessory distribution business. He owns 4.55%. And lastly, Michael Poynton joined in 2022. He was the former CEO of Mojo Motorcycles I spoke about before. So overall, the directors own 29% of the company, including the founder. To go through the QAV numbers, I'm using a stock price of $2.40, which is above the byline. It's less than consensus target. It is greater than IV1 of $1.12, less than IV2 of $2.50. Yield is 6.25%, based on that extra dividend I spoke about before. So it just squeaks in above being the average mortgage rate in Australia. So I give it a score. Stock Doctor Financial Health and Trend is strong and steady. Stockopedia ranked the quality as 89 out of 100. Value as being 96 out of 100 and overall being 99 out of 100. So Stockopedia ranked this company highly. The F score in Stockopedia is 7 out of 9. So that's the ranking of the quality metrics of the company. PE is 11 times, which is high. But as of the last results, it was 9.16, which is not quite the highest over the last 3 years. So it scores a 0 for us. PropCap is 3.99 times, which is low. So we can buy this on just under 4 times operating cash flow, which is quite good. Net equity per share or book value is $2.78. So we can buy it for less than book and book plus 30. But I do highlight that NTA, net tangible assets for this company, are only 84 cents. And we've seen this before in dealership roll-ups. Last time we saw it was in the pulled pork on ASG, Auto Sports Group, where the roll-ups in the sector means paying goodwill to buy out other franchisors, and that goodwill goes on the balance sheet, which gives it a disparity between net equity and net tangible assets. I don't mind that in these cases because, again, as long as they paid a reasonable price for those dealerships, oftentimes the dealership trades above what its asset backing is, the inventory of stock, whatever if there's any sort of calculation as to the franchise value, oftentimes someone won't sell until they get a bit above that. So as long as the franchisors they've purchased remain relevant and trade well, then I think that it's fine to go on book value. What else can I say? I did want to talk about CEO succession, which has just happened, but I'll just sum up the scores first of all. So currently, MTO scores an impressive 16 out of 17 for quality and 94%, which is 94%. And the low PropCap multiple means a QAV score of 0.24, which is pretty good. Risks, it's a retail business, so they may suffer in an economic downturn, which may be coming. Who knows? Certainly an uncertain future. They are diversifying more towards electric bikes and scooters, which are helping their ESG credentials. Motorcycles overall do use less fuel than cars and trucks, so that also helps their ESG credentials if they can convert car drivers to motorcycles. But I highlight it because people with an ESG screen will need to look closely at the business and make their mind up on whether it's a positive or a negative in terms of that. We remain neutral on those kinds of things and let our listeners decide for themselves. But I did find, the last thing to talk about in terms of risks, I did find a notice dated 27th of September 2024, which reads, Motorcycle Holdings announces the retirement of Mr. Dave Ammett as Chief Executive and Managing Director, and the appointment of Mr. Matthew Wisner as Chief Executive of the company, commencing in December 2024. Matthew brings over 20 years of senior leadership experience in both wholesale and retail automotive industries, and et cetera, and he's been managing director of various retail and wholesale operations and publicly listed companies, and has experience in the business sector. So looks quite reasonable. What piqued my interest was further on down the announcement. After 13 years as CEO and Managing Director, Mr. Dave Ammett will transition from his executive role to a non-executive director from December 2024. Mr. Ammett will continue to be actively involved in shaping the strategic direction of the company and provide counsel to Matthew, ensuring a smooth handover while retaining a large shareholding. Mr. Ammett said, "Whilst retiring from the CEO role, I intend to remain involved in the strategic direction of the company and assist Matthew in any capacity I can. However, I do need to focus on my health following a recent accident. So the time is right for me to step aside and pass the baton on to Matthew. I'm sure Motorcycle Holdings will benefit from Matthew's track record of driving business growth and focus on results. I will stay closely involved in the business to ensure smooth transition and intend to remain a significant shareholder going forward." Didn't say what the accident was. I'm wondering whether being involved in the motorcycle industry the way he is, whether he's had a motorcycle accident, which I guess is one of the dangers of riding motorcycles. So I added that to the risk involved in this company. They're all riding motorbikes, and that may be a risk. As one of my colleagues said many years ago, what do you call a cyclist? A temporary Australian. And that might be a risk for the company.
Wow. Did you get any assessment about their position on electric motorcycles?
I didn't, only that they were trying to diversify towards that sector of the business.
I just asked ChatGPT how big that niche is. It says in 2024, only 429 new electric two-wheelers were sold in Australia, in stark contrast to the 94,224 new motorcycles sold overall.
Yeah, I think they must have all been sold in King's Cross,
small.
judging by all the electric bikes that the Deliveroo riders were, and scooters the Deliveroo riders were using.
Right. Yeah, maybe that is the market for them too. Yeah, I wonder why. They're not, it's not a bigger, I don't know what percentage of cars are electric these days, but it's probably a bigger percentage than that, I would imagine. I saw a thing in the Financial Review today. You know, BYD is selling 6 times the amount of vehicles as Tesla in Australia.
Yes, I did see that article. Interesting, isn't it? And who was a big investor in BYD?
Charlie loved BYD.
Yes, correct.
I getting back to our political thing, and you were talking about whether or not this mandate gives Albo the balls to do some things like reform of the tax legislation. I was wondering if it give him the balls to decouple from the United States and throw a weight in with China.
Donald Trump called him up. Donald
Yeah,
Trump called him up, to wish him well. So they're friends.
Sorry, they're in where the milk is near the shoe rack there. I meant to tell you. I took him out the car by mistake. They're on the UHC milk thing. Sorry, Chrissy, looking for the car keys. Yes, Donald Trump called him up and they said nice things to each other, which I don't believe that story at all. But anyway. All right. Well, thank you, Tony. We do have one question from Trent that we can probably handle relatively quickly. It says Healius is currently on the buy list and has confirmed a special dividend from its sale of Loomis. As dividend is quite large, will breach its 3-point trend line on ex-dividend and extremely unlikely to bounce back above the payment date. So how would Tony handle this? This is one of Trent's continuing series of questions that he already knows the answer to because you've answered this 10,000 times over the years, but he's trying to be nice. Give us something to talk about.
Questions. Yeah. We'll call him Robin from now on, will we? Is this like that gets the Batman backslap?
Oh, right. He's volunteering for the backslap, yeah.
Yeah. Yes, well done. Look, in the absence of any other information, I'll hold it. And then I says it's quite possible the sell line will redraw itself on the graph because it is a big dividend coming off it. The price should reflect the sale when it goes ex-dividend and the return of that capital. And the price should drop. And it's, I think, a relatively short time period of about 3 or 4 weeks between ex-dividend date and the payment date. So it's possible that the share price might recover. Who knows? But yeah, it's also possible the 3-point trend line will redraw itself, given the share price may drop below the current L2 and possibly L1 as well. So in the absence of any other information, I won't try and predict. I would hold it and then make a call when it happens.
Right.
But not financial advice, Trent. You do what you need to do and sleep tired at night. Sleep well at night. But thanks for the question. And hopefully you profit from this. It's a good dividend to receive, Trent.
Brent's other question was, how does double market return square with a left of Che Guevara political view? Is this the kind of question that TK thinks market research needs as a qualifier to test the strength of the claims of the person's preference? I was wondering
you, I think, rather than me.
Yes. Oh, yes. I was wondering if anyone would pick up that. And people have asked me that. How can you be a communist and talk about share investing? I'm like, look, communism reflects the world I would like to see. I would like to see a world where everyone is taken care of, everyone's needs are met, and I would like to see us work towards a society where everyone is taken care of, and we engineer our society towards that, some form of utopian Star Trek communism where everyone gets looked after. However, I don't live in that world. I live in a world where I have rent to pay and bills to pay, so unfortunately, I need to make money like any other dirty capitalist in the meantime. But politically, I would love to see us move towards a more utopian view. And politically, that's what I would love to see us talking about more is how do we get to what is the kind of perfect society that we would like to engineer? And what are we going to do to get there? What are the steps to get from here to there? That's the kind of dialogue I would like to encourage, but I don't get to see a lot of that. We don't do that. We just go, let's fiddle around the edges. But we're not talking about building the society we want to be.
Yes, I agree. And hopefully with a large mandate, the government can address some of those issues. We'll start to think about them more. But I agree with you. But like if we're going to, base a political system around wish fulfillment, I want to live indefinitely. That's my.
Well, how do we engineer system. That, Tony? AI, yes. Robotics, nanotech. Bring in Ray Kurzweil as our advisor. Hey,
yeah.
You say that, but you know who's producing most of the AI researchers in the world right now?
Chinese Capitalist Party?
No, Tony. No, Tony.
Oh, so they're actually communists in China, are they?
Oh, do we have to have this discussion every week, Tony?
Well,
every
week. Yes, because you describe a utopian state, which is fine, but then can't point to anyone doing it at the moment. Whereas I can point to capitalism as something that's worked.
Well, has it though? It's produced Donald Trump and massive problems. Climate change.
It worked perfectly. There's a lot of bad things about it.
Oh, well, what's worked?
I think.
Anyway,
honestly,
we don't have time.
Countries like Australia has worked. Don't shut me down.
Yeah, we've done a pretty good job. We don't have time. Like this. Me too, in Tony.
Capitalism.
Yeah. That's the problem, though. That sounds great in theory, but the problem with capitalism is the people with the money end up making sure that they're not regulated. That's what's happening in the US. That's that's late stage capitalism.
You need regulation for sure.
All right, we'll do a show on that next time, but we need to run off and do a US show, and because I need to get to Kung Fu. So we don't even have time for after hours unless you've got something important about horse racing you need to throw in.
I've got a couple of horses going to a sale on Thursday, and that means I'll be recording from somewhere in New South Wales next week. I'm going to Sydney and then heading down the coast to play some golf. So probably Bateman's Bay way next week.
Lovely. Love Bateman's Bay. It's lovely.
Good.
All right. Thank you, TK. Thank you, everybody. Have a good week.
Yes, happy ASX.